manufacturing in-house, not sort of split it out like activist investor Dan Love was talking about. I mean, altogether, you've got Intel down 8.6% at the moment, which is bad enough. And then you had IBM with its numbers out late yesterday that didn't go over well at all. Revenue falling more than analysts expected in a Bloomberg survey. You know, the company's made this bet on cloud computing, artificial intelligence, think Watson. And what do you get out of it? Well, today's the stock down 9.8%. So IBM and Intel, the two worst performers in the S&P 500.
Okay, you talked IBM and Intel. We also had some banks earlier this week. We, of course, had Netflix just hit the cover off the ball with its earnings. If there is one theme as we kick off earnings season, Dave, what is it?
When it comes to beating estimates, investors just don't care. In the sense that they don't want to reward companies for doing that. Now, we've got numbers on the terminal that say 87% of the companies in the S&P 500 that have reported so far for the fourth quarter have beaten analyst average estimate in a Bloomberg survey, and that's high even by recent standards. And yet there was a story put out today, Elena Popina did it, that noted that, for companies that beat estimates, the average move has been a 1.7% drop relative to the S&P 500. Well, so they've done worse, not better on average. And in fact, it's the companies that have trailed estimates that have been rewarded.
I got distracted, so this is all yours.
I mean,
I'm going to be honest.
Are you tweeting, Carol? I hope you're tweeting. We got to be tweeting while we do this. I'm wondering, Dave, if that just means essentially, hey, investors have gotten so used to companies just beating expectations, whether it's their own guidance or it's analyst expectations, that's sort of the new normal right now. And if they don't do that, then that's the disappointment.
Yeah, I mean, especially lately, you could say that because, analysts have been so pessimistic and companies have, in essence, been able to step over the bars. So, we've seen that the last few quarters, even as they've had to deal with the effects of the coronavirus pandemic. So, to have the reaction you're getting out of fourth quarter results, that really kind of jumps out. And maybe we should be looking for more of that as we get the results going forward.
Yeah, interesting. And we've got a Fed meeting next week. Are we anticipating the equity trade slows down a little bit? We're going to be watching, obviously, the Treasury curve as a result, but anything in terms of the equity front, in terms of guidance from the Fed about easing and the easy monetary policy, which we expect to continue for some time?
Yeah, I mean, that's true, and it really becomes a question of, do you get any kind of a meaningful shift? I'm reminded of the Bloomberg opinion column that was out this week from Bill Dudley, the former head of the Federal Reserve Bank of New York, talking about, eventually the Fed is going to have to kind of put the brakes on its bond buying, the quantitative easing they've been doing. And when you get that tapering, you are bound to get a tantrum in the market. That's his take. So, that's certainly something to kind of keep in the back of your mind as we go through, these Fed meetings and figure out where, monetary policy is headed, given the shifts that are going to be coming potentially in fiscal policy with that $1.9 trillion stimulus package out there that President Biden has proposed.
If it gets through, obviously. All right, Dave Wilson, thank you so much. Dave will be back a little bit later on with his chart and stock of the day. What a week. We've had a lot of shows turned upside down because of press conferences and events, and obviously we covered the inauguration following on Wednesday. What are you thinking right now?
I'm thinking, okay, here's what I'm thinking. I'm thinking...
set up now.
Yeah. If you don't want to know, then don't ask, Carol. But I'm thinking, I understand when politicians are running late, on the campaign trail.
It happens.
Right, like that happens. Like they're going from place to place, they get stuck.
Oh my God, are you getting frustrated? They're pretty busy, this administration.
I'm getting frustrated.
Why?
If you have a press conference set for 12:30.
Right, do it.
Do it at 12:30. Don't do it at, 1:05.
That's because you were spinning your wheels earlier on Quick Take.
Show. That's what happened. We were expecting 12:30, but I think it's not that. If it's
you sound like my husband, who is constantly on time, and I am constantly late. So
but we don't even work in the presidential administration.
I know.
So the stakes aren't even that high.
Listen, what I would say is France's coronavirus cases. No, I wouldn't just say this, but they are surpassing 3 million. That just crossed the Bloomberg. Just reminding us, and that kind of fits into it's the first week for the administration, not even a full week. I would give them a little time to get settled. world.
Okay,
And
fair.
they've got some big problems to deal with, like the virus, on their plate. So I hear what you're saying, though. I get it. And we know that past presidents indeed have also been notorious for running late.
Yes, they have. Point taken.
We'll leave the specifics out. We're going to hear from President Biden, so we will take you there. He's going to talk a little bit more about some of his executive actions, specifically when it comes to food assistance for Americans.
Yeah, this is big. The president is marking his third day in office with more executive actions. This one also geared towards struggling Americans. We talked so much about the K-shaped recovery.
Totally, exactly. I was actually just talking with Peter Atwater over at William & Mary today. The year ahead issue, we're going to talk about the 50 companies to watch. We've got the 10 top housing markets to watch in 2021. We're also going to talk about Peloton, which was one of the big stories of last year. So this story in the magazine as well.
Yeah, I mean, Peloton is struggling to get those bikes to you.
I know, right?
Yeah.
It's a good thing to have strong demand, but then you got to deliver. And we're also going to talk with Chris Martin over at the Martin Guitar Company. It's a nice way to kind of get into the weekend. In the meantime, let's get a check on world and national news. For that, we're going to head on over to Nancy Lyons. She's in our D.C. studio. Hey, Nance.
Hey, Carol. President Biden is signing more executive orders this afternoon aimed at bringing more help to needy Americans. Director of the National Economic Council, Brian Deese, says he's met with some small business owners and told them Biden wants more relief to the smallest of small businesses.
We discussed the president's idea of having navigators who are dedicated to helping small business owners find right relief programs, fill out paperwork, get the money into their bank accounts, the kind of support that many of these businesses don't have because of embedded relationships that more well-connected businesses do.
Biden also wants agencies across the government to take immediate steps to enhance benefits, expanding food assistance. House Speaker Nancy Pelosi will be delivering the impeachment article against former President Trump on Monday. That's the word today from Senate Majority Leader Chuck Schumer.
The House will deliver the article of impeachment to the Senate. The Senate will conduct a trial of the impeachment of Donald Trump. It will be a full trial. It will be a fair trial.
And Schumer says senators will have to vote on whether Trump incited the insurrection against the country. A conviction requires a 2/3 majority. If convicted, the senators also expected to vote on whether to bar Trump from holding office again. Former President Trump's campaign paid more than $2.7 million to individuals and firms that organized the January 6th rally ahead of the rioters storming the Capitol. That's according to the Center for Responsive Politics. The payments, which span Trump's re-election campaign, show an ongoing financial relationship between the rally's organizers and Trump's political operation. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Masser along with my co-host Tim Stanovic. And
okay, guys, I'm going to move my stop and profit for Japanese yen higher to 103.758. Okay, so from here, as you can see, 103.558 to 103.758. Okay, I placed my stop and profit. So if you follow the trades, if you're already in trade, please move your stop higher. Yeah. Speak to you later.
Vaccine sites have stopped offering new appointments because they've run out of doses, and those are for first doses. Appointments for second doses are still being made. I do see, and this is all anecdotal, I see more and more people on Twitter, more and more people close to me are getting, like I'm getting texts from my parents that are saying, oh, so-and-so got the vaccine. And,
right.
you know, there's no sort of pattern to where they live. But it's nice to see that it is happening, albeit, you know, at
But
a
why
very
does it have to-
frustratingly slow pace.
why does it have to be so random? Like I
Yeah.
came home, you know, we were talking actually to an editor here for something you and I were taping, and you know, he said, "Hey, I got my vaccine," and I'm like writing down where, and I was sharing it with my husband, and he's like, "You know, it's so random."
It is so random.
in terms of how people are getting it, and I think that's the problem and frustration, right?
That's the problem and frustration. And, you know, one thing that is also has been a little bit frustrating is we are very close to 1 million shots a day, according to the Bloomberg vaccine
Which is impressive,
tracker.
right?
It is impressive, but it also means I think the Biden administration can really increase its goal of more than 100 million in the first 100 days. I think it will easily get there because we are so close to being there right now.
That's right. And if you think about it, but what is that, 30 million a month? And that means
Don't make me do math
10
on
months.
air. Please, ever.
Just for the U.S., sorry. That's basic
All right, that was
math
easy,
there,
though.
Tim.
That was easy.
This is Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. Down Friday, but looks like we're on track for a weekly gain for the S&P 500 index. Stocks moving lower after closing at records yesterday. Investors are growing anxious that the coronavirus will hamper growth for longer than expected, and Democrats may struggle to get a nearly $2 trillion spending bill through Congress. S&P down for the first time this 4-day week. S&P now down 9, a drop of just about 0.2%. NASDAQ now little change, down 0.1%, down 13 points. NASDAQ 100 index down 0.3%. The Dow is down 121, a drop of 0.4%. 10 years up 5/30 seconds, 10-year yield 1.08%. Gold down $13 the ounce, a drop of 0.7% at $18.56. And West Texas Intermediate crude down 1.7%, $52.23 a barrel. Couple of high-profile earnings hits today. Intel dropping 8.9%. IBM down now by 9.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So among the virus headlines, Tim and I just covered a few. UK Prime Minister Boris Johnson also says that, quote, in addition to spreading more quickly, it also now appears that there is some evidence that the new variant may be associated with a higher degree of mortality. That kind of freaked me out this morning.
It did. This headline came across as I was interviewing Michelle Cortez. And look, at the end of the day, and we're going to talk to Dr. Lustbader about it in 1 second, at the end of the day, if something is more contagious, if it overwhelms hospitals more, then that could increase the mortality rate just as a function of putting a tax on healthcare workers.
Right. It's so simple, right?
Right.
But it can have a really big impact. Stats on the virus right now: global cases exceeding 97.7 million, deaths near 2.1 million, and more than 56.7 million shots of a COVID vaccine have been given around the globe. Joining us, as he always does every week, Dr. Ian Lustbader, Clinical Associate Professor of Medicine at NYU Langone Medical Center, on the phone in New York City. Ian, good to have you back with us. How are you? And I am curious how you see this news from the UK Prime Minister about this variant spreading more quickly and then associated with a higher degree of mortality. Is it, as Tim mentioned, about kind of a higher degree of a taxing on our medical systems, or, are you a little bit more worried about something more being there?
Happy Friday. Thanks, guys.
Happy Friday.
On that note, well, there's no question that it does seem that the UK variant is growing, and several other variants, South America and South Africa, all have to be kept an eye on. And viruses mutate. We've talked about this before. We don't really think the virus can mutate that dramatically, because if the spike protein, which is where it attaches to our cells, if that mutates too dramatically, it may not be able to attach. But obviously the concern is mutating to the point that it still can attach, and in the higher transmissibility, that really may be part of the issue, is that attachment and more easily spread. But at this point, it does appear the vaccine does, because it's a polyclonal antibody, hits many parts of the spike protein, does seem protective. But you're exactly right. The problem is we have greater capacity to give shots than we have available vaccine. We really do need to mobilize on a grander scale the public health system to be setting up vaccine centers, whether it's in the Javits Center or other places. We really need to get a move on that to vaccinate as many people as soon as possible. There's still some vaccine hesitancy. And we are seeing some more cases in the hospital, nothing like what was there almost a year ago, but definitely climbing. And exactly, as was said, if we're seeing more cases, eventually that's going to translate to more hospitalizations and ultimately more deaths. So that is the concern, and it's a real concern.
You mentioned, Dr. Lustbader, the idea of not necessarily mass vaccination sites, but more and more sites. We got some news just this morning from Walmart that the company's planning to offer COVID-19 vaccines in at least 7 additional states. They're going to try to, if the supply is there, ramp up to give up to 13 million shots a month. We also, as Carol and I talked about, heard from a Bloomberg News reporter who said that Wall Street is pressing New York to let it help speed up vaccinations. When it comes to public-private partnerships, companies like Walmart, CVS, working with governments and states, is that the key to mass vaccination?
Yes, I totally agree with you. I think that is the key. Really, rather than having 1 or 2 giant sites, having these multiple scattered areas. And of course, with Pfizer, it is a refrigeration issue. Moderna, a little easier. As new vaccines come along, regular refrigeration should make it easier. But totally, there is no reason if Walmart or CVS, Walgreens, etc., have the infrastructure, there's no reason why they can't do it. Giving vaccinations requires some, sort of level of skill, but not impossible. And if they're already set up for that, the more the merrier would be my response at this time, because that's ultimately only how you're going to bend the curve.
Right, exactly. Hey, one thing, you know what, Dr. Lospater, one thing that really kind of concerned me as President Biden was laying out his plan to deal with the virus and get more vaccines out to people was how many vaccines are actually in stockpile. Like, I think there's we just don't know. Are there a bunch of vaccines sitting somewhere just waiting to be dispersed? Or is manufacturing now just not able to keep up? Like, do you have any idea?
I think it's both. Okay. Certainly, the manufacturers are incentivized because they're paid to do it. You can't just snap your fingers because this is a sophisticated, vaccine. Making those lysosomes and with messenger RNA in them is not an easy technology. But my understanding is that we have somewhere in the range of 38 million doses, and only about 17 million have been given out. So I think we have a lot that really have not been distributed yet. Why, I am not sure. And I think we need to do both. I think we need to get into arms what we have available. There are some strategies, hold back some for second doses and so forth. I think we've learned that it probably makes more sense just to get as many people vaccinated the first time, and even if there's a slight delay in getting that second vaccine, while you're waiting for manufacturing, we can deal with it.
All right. Hey, sit tight for a second. We're going to go do some news, world and national news, and then we'll come back to you. We're going to get back to Dr. Ian Lospater, Clinical Associate Professor of Medicine at NYU Langone Medical Center, on the phone in New York City.
Today's the day. My grandma, she's 98, scheduled to get the first dose of her vaccine.
That's fantastic.
I know. I'm very excited.
Where is she?
She's in Connecticut.
She's in Connecticut. So
yeah,
East
Connecticut's
Coast.
doing a pretty good job, according to the vaccine tracker.
Seems to be, right? That we hear
but she should have gotten it earlier. She's 98.
Right. Which,
what
again,
can you do?
All right. Stick around, everybody.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. It is Friday. We're in our Interactive Brokers studio, Tim and myself. We're going to continue with Dr. Lustbader talking about the latest virus and vaccine headlines.
Yeah, the rollout of the vaccine, the bumpy road to the rollout, and then also the headlines that we're getting from Europe, too.
Yeah, exactly. And I do wonder if that's kind of our future. We have seen it. Let's get back to business stories and the trading day. I had to remember where we were going, Charlie Pellet.
Indeed. Hey, it's a Friday, and here's what's going on. Stocks trading mixed right now. We've got NASDAQ just turned higher moments ago. I'm going to call it unchanged for this update. The S&P remains lower now by 7 points, down by about 0.2%, and the Dow's down 120, a drop there of 0.4%. NASDAQ up now by just about 1 point. Bottom line here, stocks edging lower after closing at records as investors grow anxious that the coronavirus will hamper growth for longer than expected, and Democrats may struggle to get a nearly $2 trillion spending bill through Congress. The 10-year yield, 1.09%. Gold is down 0.7%. 18.56 the ounce. West Texas Intermediate crude down 1.5% now, 52.35 a barrel. COVID-19 hospitalizations in the U.S. fell by the most ever yesterday. The latest sign that relief may be coming to a healthcare system that's been fighting the virus for almost a year. And some of New York's biggest employers, Goldman, J.P. Morgan, Citigroup, and KKR, are urging local leaders, state leaders as well, to let them help with COVID-19 vaccination efforts, arguing that the slow rollout is putting the state's economic recovery at risk. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health.
What we need to now focus on, after moving away from the high priority populations, is the mass vaccination campaign. And, the Biden administration just made a few announcements that really will facilitate that. We need to make sure that people are getting their vaccine. We need to make sure that they get them on the prescribed dose, because we know the prescribed dosing will give us that 90 to 95% protection rate that will really make an impact come the fall in terms of the COVID-19 pandemic.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of the vaccine names, for the most part higher on this Friday. Pfizer up by 0.5%, BioNTech up by 1.4%, AstraZeneca, the ADR is up 1.4%. Moderna, though, is lower by 0.7%. Recapping, equities now mixed. NASDAQ up 2 points, a little change there. S&P down 7, a drop of 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Got it, Charlie. Thank you so much. Let's get back to Dr. Ian Lustbader, Clinical Associate Professor of Medicine at NYU Langone Medical Center, on the phone in New York City. Ian, can you believe we're a year in?
Yeah, it is hard to believe. I think we really underestimated things. I remember when we were in the studio back in January and February, and there were just a few cases, and thought, well, I remember a question being asked of me, do I think this will become a pandemic? And I said, well, it is multiple countries, that could certainly happen. I think I certainly underestimated just how devastating it would be, and would never have thought a year down the line. And when I walked down Madison Avenue, back in the dark days, but even now there are so many stores boarded up, and it's really been a pretty terrible pandemic. Not as bad, thank goodness, as 1918, but we're not through it yet. So unfortunately, more damage ahead, even with the vaccine.
It is shocking. I mean, I'm just thinking back to where we were 10, 11 months ago, and it's mind-boggling to think. You could never have told me a year ago that we'd be a year into a pandemic and 400,000.
I think everybody I don't think we anticipated it would be as significant as it turned out to be.
I mean, personally, you don't think of these things happening in 2021 or 2020 in the United States.
Right.
And I think for a lot of Americans, that's, I don't know if sobering is the right word, but it's been really shocking. And I wonder, Doctor, I mean, does that sort of, takeaway make sense? It's like you sort of don't see this happening in the wealthiest country in the world.
Right. It is really a global phenomenon, not at all shocking. Since 1918, there were ships and so forth, but now with air travel, just no shock that these, viruses are everywhere, mutating a little more than I think we anticipated. But I think the upside, if there is one, is that we've developed new vaccine technology quickly. I think this can be tweaked if there are more significant mutations, if this does have to become a seasonal vaccine process, hopefully not. I think the mRNA technology is really a breakthrough. And I think hopefully whether it's personal protective equipment, needles, syringes, ventilators, hopefully we can not fight the last war, but be prepared if there are other pandemics, and statistically that, may happen. So it's been a lesson and a painful lesson, and hopefully we will make more efforts to really prepare and harden the system, whether it's, our infrastructure system that needs improvement, the grid, and other approaches. We need to stop fighting and really try to make forward progress to hardening the grid and really trying to think what other threats may be out there. And unfortunately, there's still some vaccine hesitancy. I see some patients and some staff, although the vast majority, 85% of the NYU doctors have taken the vaccine, there's still some vaccine hesitancy. It's going to be hard to reach 80% unless we get everyone on board.
Yeah, that's the thing that really kind of concerns me. And you heard Fauci talking about in terms of the percentage he would like to see to really get to herd immunity. And he's looking for a higher percentage than I think what maybe some of the medical or CDC is recommending.
Right, and I think knowing a lot of doctors who have received the vaccine and are fine, I think that is somewhat reassuring. My patients are saying, "Oh, you took 2 shots. How are you doing? Any issues?" So you're trying to really reassure people that it's safe. There are, minimal risks and minimal side effects.
Right.
And, unfortunately, just the distribution has been very disappointing, and I think we still have a few rough months to go unless we really mobilize to distribute getting vaccines in arms, which is needles, syringes, the actual vaccine, and staff to do it.
Okay, so we only have about 10 seconds left. Your timeline for getting things back to normal, when does it happen?
I still believe by summertime we will have reached that 70 or 80%, and certainly by early fall. I'm optimistic
crossed.
that it will happen.
Yeah, I feel like we're hearing that a lot.
Yeah, I just like to end on optimism. That's nice.
I agree.
It's better than hearing the end of the year or 2022.
Exactly. I can get my head around that.
Yeah.
Hey, Ian, be well. Take care of yourself.
Thank
Dr.
you.
Ian Lustbader, Clinical Associate Professor of Medicine at NYU Langone Medical Center, on the phone from New York City. You're right. Thanks for the optimism.
Yeah, Friday.
No, but I think, listen, we're increasingly hearing that, and I think we even heard that from Dr. Fauci, like this whole idea that even by the end of spring, early summer, we'll maybe see a lot of people already being vaccinated.
But it's going to be a tough road to get there. He told us that yesterday. 100,000 more people could die in the next month. And look, given what happened since December, that makes sense.
It bothers me when I see the global cases of deaths in about a quarter are from the United States. All right, let's get back to world and national news. Back on over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol, the U.S. Senate is getting ready for the impeachment trial of former President Trump for inciting the insurrection that disrupted the U.S. Capitol. Bloomberg's Irv Chapman with the latest from Washington.
Speaker Nancy Pelosi said the House is ready to transmit the article of impeachment. Senate Leader Chuck Schumer said she plans to send it over on Monday.
A trial will be held in the United States Senate. It will be a full trial. It will be a fair trial. And there will be a vote on whether to convict the president.
Schumer also told the Senate that he learned last night the National Guard troops were sleeping cheek by jowl in parking garages, and he and other senators saw to it that they were properly accommodated. In Washington, Irv Chapman, Bloomberg Radio.
Well, no one has come forward yet to claim the winning Powerball ticket worth $731 million. It was bought at a convenience store in a small Maryland town, and Maryland's lottery Director Doug Lloyd says we may never know the winner's name since that state is one of 7 that allow winners to remain anonymous.
It's an intense lottery debate. Some people want us to name all the winners. We like to allow people the comfortability to select how they come in and claim their prize.
If you were not lucky enough to be the Powerball winner, you have another chance tonight. The Mega Millions jackpot is now $1 billion. Well, he's considered by many to be one of the greatest to ever play the game of baseball. Home run king Hank Aaron has died at the age of 86. He spent most of his career with the Braves. He broke Babe Ruth's home run record of 714 in 1974, then went on to retire with 755 home runs. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Masser along with Tim Stenovic in our Interactive Brokers studio. And this story, we had seen it actually move up to the top of among the most read. It's still up there, but anyway, it caught our attention. Former President Donald Trump's campaign apparently paying more than $2.7 million to individuals and firms that organized the January 6th rally that we know led to the breaching of the U.S. Capitol. This is according to the Center for Responsive Politics.
Yeah, this is a story by Bill Allison. The payments, which span Trump's re-election campaign, show an ongoing financial relationship between the organizers of the rally and the former president's political operation. The eight paid Trump campaign officials, our colleague Bill writes, were named on the permit issued by the National Park Service for the rally, including Maggie Mulvaney, who is the niece of Mick Mulvaney.
Yeah, exactly. It's interesting, and apparently she was paid $138,000 by the campaign through November 23rd. Listen, we're just putting this out there because it's interesting. I think one of the questions that came up after the breaching of the Capitol and the riots there, or the protests, is that, people were asking the question, well, it'll be interesting to know who funded the rally, maybe whose name was on the permit. And so this is why this information is starting to come out.
And I think also it will serve as evidence in the upcoming Senate impeachment trial of the president. We learned earlier today that Democrats are going to send single article of impeachment over next week. But I wouldn't be surprised if Democrats use this as evidence to try to convict the former president.
Right, exactly. And we also know at the same time that Mitch McConnell has, I think, given the president a couple of weeks to get his legal team together, because I think there was a question about how quickly does this impeachment trial begin. So having a couple of weeks to get his team together, the president, or the former president, I should say, Donald Trump, before this moves forward. But you're right, this will be evidence.
Yeah, and look, the senators have a lot to do right now. They have to focus on the economic recovery and getting past the pandemic and this impeachment too.
All right, you're listening to Bloomberg Business Week, and this is Bloomberg.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. An update out now for NASDAQ, a down day for both the S&P and the Dow. Stocks edging lower after closing at records. Investors growing anxious that the virus will hamper growth for longer than expected, and Democrats may struggle to get a nearly $2 trillion spending bill through Congress. S&P down for the first time this holiday shortened week, down 6 right now, a drop of 0.2%. NASDAQ higher by 5, up less than 0.1%. Little change there. The Dow down 124, down by 0.4%. 10 years up 5/32, 10-year yield 1.08%. Gold down 0.7%, 18.56 the ounce, and West Texas Intermediate crude down 1.6%, 52.26 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, this week it's the year ahead issue of the magazine, and it also includes an annual 50 companies to watch. Here with that and more on the issue is Bloomberg Business Week editor Joel Weber. He's on the Access line in Brooklyn. And Joel, I always love this list. I feel like it's a guide for us throughout the year, and it really leverages some of the expertise and analysis that we have here at Bloomberg.
Yeah, that's right. And this is an annual collaboration that we do with Bloomberg Intelligence and the analysts over there. So big props to them for everything that they brought to bear here, because there's way too many companies for us to figure out on our own. And they basically take the universe of the 2,000 companies that they track and basically put it through their spreadsheets until we come out with 50 that we think are really interesting to watch. And watch means not just buy or sell, where we have to be a little bit more ambivalent than that because they can't make calls. But investors and readers have definitely noticed. I've had a portfolio manager ping me before and say, not sure if you knew this or not, but like 40 of the companies that are on this year's list, this was a year back, were outperforming their benchmarks.
So cool.
So it's, if you knew what you were doing, you could go long on a few and short some others and probably look pretty smart.
Past performance is no indication of
it's true, especially not right now. Yeah.
So Joel, what is sort of the common thread that runs through these 50 companies? I mean, because you have consumer staples on here, you've got materials, you got healthcare, you got Boeing on here. What ties them together?
There's a couple themes that I've noticed that I thought were interesting to comment on. One is travel, and I think you can see this with, you mentioned Boeing there. Now that they're on the other side of the MAX debacle, once we see travel start to perk up, we expect that that plane will be back in business, which will be a huge deal for Boeing as well as for airlines. I mean, there's also a couple of airlines on this list that I think are really interesting, Cathay Pacific being one, but also Wizz Air. There's another article in this issue about European airlines where Wizz operates, and Wizz was sort of a breakout before, and sort of all eyes on them to see if they can come back to it. So I thought that travel one was interesting because I think we all sort of innately expect that to be a sector that, the moment that you're vaccinated and able to travel, I think a lot of people will.
Yeah, sign me up. Hey, what's really cool too, it's some household names, and then it's some companies that we don't really talk a lot about, and that's what kind of makes this interesting.
Oh, come on, you've never heard of some of these companies, right?
I've never heard of Wizz Air.
Yeah, I mean, if we only told you about GEs, it's like, yeah, right. Thanks for providing some service. So we really try to dig when we put this list together, so that it's, you get a combination of ones that you've heard of, AB InBev, for example, but we pair that with, not only an international quotient, but just sort of the sense of discovery, so that, everybody's heard of Tesla, but, perhaps you haven't heard of, somebody like Albemarle, which is in the lithium business. And if you're looking for EV exposure, like something like that makes a lot of sense. So
I was just talking about Albemarle at dinner last night. I'm just going to tell you.
There you go. And now you can talk about it, over the weekend, whenever you're, having remote dinners with friends or whatever. But back to the other themes that I thought were really interesting. Another one, I don't know if you guys noticed this, how much China plays a role in here. And there are domestic companies. There are companies that have more international exposure. But when you go through the list, it's really impressive just how much China factors into everything.
Yeah. Are there other regional variations here? I mean, did you sort of put parameters on when you talked to the team at Bloomberg Intelligence, or do you say, hey, these are 2,000 companies. We want to know which 50 you think should be on the list?
So we do have, we basically just want to make sure that we have regional exposure. So if we talked about 50 and didn't account for Europe or Asia, especially off this year, it wouldn't be an interesting list. So we don't set any hard rules. We kind of let the data speak, but we definitely just make sure that we have that regional exposure in addition to everything else. I do think I think we're a little overweight on Asia, and that is for a good reason because another company that totally was an we're all still locked at home and looking for new consoles. That we had the Sony Microsoft war tends to kind of lead first, but then Nintendo comes from behind and everybody ends up playing Switch, it seems. So we'll see if that one proves true. So that's just another Asia example for you. But there's even some South America in there.
I feel like I just got a little bit more insight into Joel Weber and his weekend.
You're not going to get the 4K Switch, Carol?
I haven't, not yet.
What about PayPal, Joel? This was one that was kind of surprising, just in the sense of it's gotten a lot of attention this year for adding crypto capabilities. But when you think of digital wallets, I mean, your team's saying, hey, you could likely be reaching for your PayPal account.
Yeah, the PayPal one is interesting because we've seen, there's so many players there, but then it's a space where it feels like entrenched players, like a PayPal, may have sort of an unfair advantage. So the fact that they've navigated so many security stuff for so long, that everyone's paying remote already, they seem like a really interesting one to keep an eye on. And the numbers there are just really interesting to see, sales growth, go up 15%. It just totally, the circumstances play straight to them.
Well, and speaking of sales growth, Twilio, Jeff Lawson, co-founder, CEO, we caught up with him actually yesterday. He's got a new book out, and we talked about some of that growth. I mean, they had an unbelievable 2020, and he's pretty upbeat, once again for 2021. But it's a name that we've talked about a lot here, Joel.
Yeah, and they're interesting. It's that omni-channel play, super convenient business software. That business software space, I guess you could call that maybe like a sub-thread through here. There's a couple different companies that end up kind of working in that space, and it's because with remote capabilities being what they are, everyone's looking for not only exposure but solutions in this space, and Twilio is certainly an example of that.
All right. Well, it's a great list, and I got to say, it's one of my favorite issues. I feel like I put this on the side, I leave it on my desk, and I constantly refer to it throughout the year. Joel, thank you so much. Really appreciate it. Joel Weber, editor of Bloomberg Business Week, on the remote access from Brooklyn. And like I said, what?
Oh, well, I'm just, I know we're doing this on the radio, and you can certainly watch us on YouTube by looking for Bloomberg Global News. But one of the coolest things about this is just the graphical representation of these 50 companies.
Yeah.
There are real-time stock tickers, so you can follow along, and throughout the trading day, you can see if it's in the red or in the green and how much it's up or down by.
Yeah, it's really cool. And the tracking, female board membership, sales growth. I mean, all of these interesting metrics that investors are increasingly looking at, especially when it comes to more diversity at the firms. And Jeff Lawson of Twilio, by the way, he's on our weekend show, so you can check that out. Just go to our podcast feed at Apple or at Bloomberg.com, because talks about his book, talks about why you've got to talk to your developer, basically, in terms of your company and your strategy. All right, for those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Business Week continues. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is coming up next. Coming up next, we're going to get to the business of Washington and the new administration setting out some more policies to deal with the impact of COVID. That's coming up on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Friday, January 22nd. It is a mixed Friday. We're on track for a winning week. S&P right now, little change, down 4 points, a drop of 0.1%. NASDAQ holding on to a gain now of 22 points, best level of the day, up by 0.2%. The down 114, down by 0.4%. 10-year yield 1.08%. Stocks edging lower after closing at records as investors grow anxious that the virus will have growth for longer than expected, and Democrats may struggle to get a nearly $2 trillion spending bill through Congress. S&P down for the first time this 4-day week. Gold right now, spot gold down 0.8%, $18.65 the ounce, $18.55 the ounce, I should say, and West Texas Intermediate crude down 1.7%, $52.21 for a barrel of WTI. As for the rollout of the vaccine and ultimately what it may mean for the U.S. economy, Marilyn Watson is head of Global Fundamental Fixed Income Strategy at BlackRock Financial.
I do think when you look at economic activity, when you look at the restrictions caused by trying to inhibit the spread of the virus, and then you look elsewhere, if you look at parts of Asia, for example, we've seen a huge improvement in GDP growth in countries such as China and elsewhere. And I do think we'll continue to see that going forward, as we do see the vaccine roll out at different rates.
Intel dropping after its new boss recommitted to chip making, a move opposed by some investors. Intel shares, they're dropping today by 8.6%. IBM, while after earnings, down by 9.7%. Oil edging lower with an increase in U.S. crude stockpiles for the first time since December, pointing to the near-term obstacles still facing the market as it recovers from the pandemic. Checking some of the big major oil companies, ExxonMobil down now by 1.4%. BP is down by 1%. EOG Resources down 1%. And shares of Pioneer Natural up by 0.1%. Again, recapping equities trading mix, NASDAQ higher, S&P down 4. That is a drop for the S&P of 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Yeah, you're listening to Bloomberg Business Week. It's Friday. What a week it's been. And the president and his team certainly busy in terms of laying out initiatives, a lot of executive orders. It is his third day in office, although as Tim mentioned, it's how many hours really?
Yeah, I mean, okay, so like what, 45, 46
yeah, exactly.
roughly?
A lot of executive actions.
No,
What?
51, 52,
all right,
sorry.
All right. We'll work on that math. But he is looking to do some executive actions to boost food assistance for impoverished Americans and also use federal contracts as a step toward his proposed nationwide minimum wage hike. There's a lot going on. So let's kind of find out where we are. We are waiting some comments from President Biden once again. And as soon as he begins speaking from the White House, we'll take you there. In the meantime, Eric Wasson, congressional reporter at Bloomberg News, on the phone from Washington, D.C. So what are you kind of anticipating? Where are we? And kind of what's the backdrop and environment in Congress right now as the president is laying out these programs and these executive orders?
Well, there's really only so much that the new president can do under executive order. He really is looking for Congress to approve this $1.9 trillion stimulus and economic recovery and COVID relief package. That's what I've been reporting on today up here on the Hill. And it looks like a lot of moderate senators that he'll need to get this over the line, such as Susan Collins, Mitt Romney, and are very, very skeptical. They're looking at a much smaller bill that perhaps is focused on vaccine distribution or a few other tweaks to the COVID, effort. They're going to be having a very pivotal sort of 3 p.m. Sunday phone call with Brian Deese, the new top economic advisor to President Biden, and then we'll see after that if they can come together on a bipartisan deal. If not, Nancy Pelosi has already said. She told the donors last night in a Zoom call she's ready to move to budget reconciliation as fast-track method with just Democratic votes. They could ram some of this through. But again, this is all tied up with the impeachment trial of Trump, the inability to organize the Senate. So it's a bit chaotic here on the Hill right now.
So what could Pelosi and Democrats get done through budget reconciliation, and how would that differ from the $1.9 trillion proposal that the Biden team unveiled a little over a week ago?
The rules of budget reconciliation are very arcane, especially something called the Byrd Rule, named after the former West Virginia Democrat Senator and Majority Leader they can definitely do things like the stimulus payments, some of the child tax credits, the earned income tax credit. Those are all fiscal in nature. They all definitely fall within the purview. Most experts I talk to say a lot of the appropriated funding, such as for schools, healthcare, vaccines, cannot be done through that, but perhaps you could do that and get bipartisan agreement outside of the reconciliation bill. There's a big debate going on in Washington whether you can do the minimum wage increase, something he's looking to bring that up to $15. That's
Right.
very much in dispute.
Got it. Hey, Eric, we're going to take everybody to the state dining room and President Biden.
Economic team. And we remain in a once-in-a-century public health crisis that's led to the most unequal job and economic crisis in modern history. And the crisis is only deepening. It's not getting better, it's deepening. Yesterday, we learned that 900,000 more Americans file for unemployment. 900,000. They join millions of Americans who, through no fault of their own, have lost the dignity and respect that comes with a job and a paycheck. So many of them never thought they'd ever be out of work in the first place. And just like my dad did when he used to lie awake at night when I was a kid, staring at the ceiling, unable to sleep because he worried about whether or not he was about to lose his health care, or whether we were going to have the money to pay the mortgage because of the economic circumstance he was in. And now a lot of these folks are facing eviction, are waiting hours in their cars, literally hours in their cars, waiting to be able to feed their children as they drive up to a food bank. It's the United States of America. And they're waiting to feed their kids. Folks who are able to still keep their job, many have seen their paychecks reduced and they're barely hanging on and wondering what's next. Sometimes the anxiety about what's going to happen next is more consequential than what actually happened. But this is happening today in America. And this cannot be who we are as a country. These are not the values of our nation. We cannot, will not let people go hungry. We cannot let people be evicted because of nothing they did themselves. They cannot watch people lose their jobs, and we have to act. We have to act now. It's not just to meet the moral obligation to treat our fellow Americans with the dignity and respect they deserve. This is an economic imperative, a growing economic consensus that we must act decisively and boldly to grow the economy for all Americans, not just for tomorrow, but in the future. There's a growing chorus of top economists that agree that at this moment of crisis, with the interest rates as low as they are, historic lows, it is smart fiscal investment, including deficit spending. And they're more urgent than ever. And that return on these investments in jobs and racial equity is going to prevent long-term economic damage and benefits that are going to far surpass their cost. If we don't act, the rest of the world is not standing still in terms of their competitive advantage or their competitive possibilities relative to us. That our situation will be more stable and not less stable, according to these economists. And that such investments in our people is going to strengthen our economic competitiveness as a nation and help us outcompete our competitors in the global economy, because we're going to grow the economy with these investments. While the COVID-19 package that passed in December was the first step, as I said at the time, just a down payment. We need more action, and we need to move fast. Last week, I laid out a two-step plan of rescue and recovery to get through the crisis and to a better and stronger and more secure America. The first step of our American Rescue Plan is a plan to tackle the pandemic and get direct financial relief to Americans who need it the most. In just a few days, it's just been a few days since I outlined this plan. It's received bipartisan support from a majority of American mayors and governors. Businesses and labor organizations have together welcomed it as an urgent action that's needed. Even Wall Street firms have underscored its importance. In fact, an analysis by Moody's estimates that if we pass our American Rescue Plan, the economy would create 7.5 million jobs just in this year alone. That would be on the way to the more than 18 million, I think it was 18,600,000 jobs that they believe would be created over the 4-year period with our Build Back Better recovery plan. And with our American Rescue Plan, our economy would return to full employment a full year faster than without the plan. Even President Trump's now, not some liberal organization, President Trump's top former economic advisor, Kevin Hassett, said, quote, he absolutely is in favor of this rescue plan. This almost doesn't have a partisan piece to it. We're seeing the support because this plan takes a step that we so urgently need. More than just a step, number of steps. It funds big parts of the COVID-19 national strategy that we released yesterday. Our national strategy puts us on a war footing to aggressively speed up our COVID-19 response, especially on vaccines and testing and reopening our schools. I found it fascinating. Yesterday, the press asked the question, is 100 million enough? Week before, they're saying, Biden, you crazy? You can't do 100 million in 100 days. Well, we're going to, God willing, not only do 100 million, we're going to do more than that. But we have to do this. We have to move. The American Rescue Plan also includes economic relief for most Americans who are in need. We're going to finish the job of getting a total of $2,000 in direct payments to folks. $600, which was already passed, is simply not enough. If you still have to choose between paying your rent, putting food on the table. We'll extend unemployment insurance benefits for millions of workers beyond the deadline that's now set. It means that 16 million Americans who are currently relying on unemployment benefits while they look for work can count on these checks continuing to be there in the middle of this crisis. The American Rescue Plan also addresses the growing housing crisis in America. Approximately 14 million Americans, 14 million, have fallen behind on rent, and many risk eviction. If we fail to act, there will be a wave of evictions and foreclosures in the coming months as this pandemic rages on, because there's nothing we can do to change the trajectory of the pandemic in the next several months. So look, this would overwhelm emergency shelters, increase COVID-19 infections as people have nowhere to go and can't socially distance. The American Rescue Plan asks Congress to provide rental assistance for millions of hard-hit families and tenants. This will also be a bridge to economic recovery for countless mom and pop landlords who can't afford not to have the rent. But they can't wait. So on Inauguration Day, I directed my administration to extend nationwide restrictions on evictions and foreclosures. These crises are straining the budgets of states and cities and tribal communities that are forced to consider layoffs and service reductions among essential workers. Police officers, firefighters, first responders, nurses, they're all at the risk of losing their jobs. Over the last year, more than 600,000 educators have lost their jobs in cities and towns. The American Rescue Plan will provide emergency funding to keep these essential workers on the job and maintain essential services. Look, it will also help small businesses that are the engines of our economic growth. When you say small business, most people think the major corporate entities are the ones that hire everybody. These small businesses are the glues that hold, and they're important, but these small businesses that hold the community, the glue that hold these communities together. They're hurting badly, and they account for nearly half of the entire U.S. workforce, nearly half. Our rescue plan will provide flexible grants to help the hardest hit small businesses survive the pandemic, and low-cost capital to help entrepreneurs of all backgrounds create and maintain jobs, plus provide essential goods and services that communities so desperately depend on. Look, our recovery plan also calls for an increase in the minimum wage at least $15 an hour. No one in America should work 40 hours a week, making below the poverty line. $15 gets people above the poverty line. We have so many millions of people working, 40 hours a week working, and some with 2 jobs, and they're still below the poverty line. Our plan includes access to affordable child care. That's going to enable parents, particularly women, to get back to work. Millions who are not working now because they don't have that care. All told, the American Rescue Plan would lift 12 million Americans out of poverty and cut child poverty in half. That's 5 million children lifted out of poverty. Our plan would reduce poverty in the black community by 1/3 and reduce poverty in the Hispanic community by almost 40%. I look forward to working with members of Congress of both parties to move quickly to get this American Rescue Plan to the American people. And then we can move with equal urgency and bipartisanship to the second step of our economic plan, to Build Back Better, the recovery plan. It's a plan that's going to make historic investments in infrastructure, manufacturing, innovation, research and development, and clean energy, and so much more that's going to create millions more jobs, good paying jobs, not minimum wage jobs. Well, while we work with members of both parties in the Congress, there are steps that we can and must take right now. For example, on Inauguration Day, I directed my administration to pause student loan repayments for interest, for the interest payments for Americans with federal student loans until at least September. So they're not going to have to pay till September. They still pay the bill as it stands now, but they will accrue interest, and they don't have to begin to pay until September. And we may have to look beyond that, I might add. Today, I'm signing an executive order that directs the whole of government effort to help millions of Americans who are badly hurting. It requires all federal agencies to do what they can do to provide relief to families, small business, and communities. And in the days ahead, I expect agencies to act. Let me touch on 2 ways these actions can help change Americans' lives. We need to tackle the growing hunger crisis in America. 1 in 7 households in America, 1 in 7, more than 1 in 5 Black and Latino households in America report they do not have enough food to eat. That includes nearly 30 million adults and as many as 12 million children. And again, they're in this situation through no fault of their own. It's unconscionable. The American Rescue Plan provides additional emergency food and nutrition assistance for tens of millions of children and families to address this crisis. But families literally can't wait another day. As a result of the executive order I'm going to shortly sign, the Department of Agriculture will consider taking immediate steps to make it easier for the hardest hit families to enroll and claim more generous benefits in the critical food and nutrition assistance area. This is going to help tens of millions of families, especially those who can't provide meals for their kids, who are learning remotely at home, are not receiving the regular meal plans that they have at school for breakfast or lunch. We also need to protect the health and safety of the American worker. Right now, approximately 40% of households in America have at least one member with a pre-existing condition. Just imagine, you're out of work through no fault of your own. You file for unemployment while you're looking for a job. You find one, and you get an offer. But then you find out there's a high risk of you getting infected with COVID-19 because of your condition. You and your loved ones have ever even greater risk of death and serious illness because of the pre-existing conditions. So you turn it down. Right now, if you did that, you could be denied unemployment insurance because you're offered a job, you didn't take it. It's wrong. No one should have to choose between their livelihoods and their own health or the health of their loved ones in the middle of a deadly pandemic. Because of the executive order I'm about to sign, I expect the Department of Labor to guarantee the right to refuse employment that will jeopardize your health, and if you do so, you'll still be able to qualify for the insurance. That's a judgment the Labor Department will make. Look, there's 2 consequential ways that the action I'm taking today will help people in need. Another way to help approximately 2 million veterans maintain their financial footing by pausing federal collections on overpayments and debts. Another makes sure that federal contractors who are receiving taxpayers' dollars provide their workers with the pay and benefits they deserve. These are places where federal tax dollars are administered, are being made available to build things from ships to staircases. And we let out, the federal government lets the contract, and we're going to make sure that they buy American and are made in America. And here's another. Right now, there are up to 8 million people that are eligible for direct payments from the CARES Act and a relief bill passed in December. They're entitled to those payments, but there's not an easy way for those folks to access them. So we're making it a priority today to fix that problem and get them relief they're entitled to. Look, I'm going to close and summarize this way. A lot of America is hurting. The virus is surging. We're 400,000 dead, expected to reach well over 60,000. Families are going hungry. People are at risk of being evicted. Job losses are mounting again. We need to act. No matter how you look at it, we need to act. If we act now, our economy will be stronger in both the short and long run. That's what economists left, right, and center are telling us. Both liberal and conservative will be better and stronger across the board. If we act now, we'll be better able to compete with the world. If we act now, we'll be better able to meet our moral obligations to one another as Americans. I don't believe the people of this country just want to stand by and watch their friends, their neighbors, coworkers, fellow Americans go hungry, lose their home, lose their sense of dignity and hope and respect. I don't believe that, especially in the middle of a pandemic that's so weak and wreaked so much havoc and caused so much pain on America. That's not who we are. The bottom line is this. We're in a national emergency. We need to act like we're in a national emergency. So we've got to move with everything we've got to do it together. I don't believe Democrats or Republicans are going hungry and losing jobs. I believe Americans are going hungry and losing their jobs. And we have the tools to fix it. We have the tools to get through this. We have the tools to get this virus under control and our economy back on track. And we have the tools to help people. So let's use the tools, all of them. Use them now. So I'm going to sign this executive order, but let me conclude again by saying, folks, this is one of the cases where business, labor, Wall Street, Main Street, liberal, conservative economists know we have to act now, not only to help people who are in need now, but to allow us to be in a competitive position worldwide and be the leader of the world economy in the next year and 2 and 3 and going forward. So thank you. I'm going to sign this executive order.
All right, so that is President Biden there at the State Dining Room, and he is getting ready to sign 2 executive orders. We just heard him really setting it up. One is to boost food assistance for impoverished Americans, and then one to federal contracts as a step toward his proposed nationwide minimum wage.
The president started out his presentation just now by saying that he and Vice President Harris have been briefed by the economic team. The president also saying, talking, of course, about the pandemic, because that's the whole reason why this economic plan is in place. He says nothing we can do to change the trajectory of the pandemic, and that COVID deaths are expected to be well over 600,000, a staggering figure given that we're at just over 400,000 right now.
Especially when I think if you go back a few months, right, we never thought it would get to these levels. Let's take you back to the State Dining Room.
Thank you very much.
Mr. President, do you support Mitch McConnell's timeline for a February impeachment trial?
I haven't heard the detail of it, but I do think that having some time to get our administration up and running, I want to thank the Senate for passing out our Secretary of Defense. Looks like our Secretary of Treasury. Looks like our Secretary of State's in place. So the more time we have to get up and running to meet these crises, the better.
All right, so that's President Biden signing those 2 executive orders there at the State Dining Room. This all has to play into his economic plan. This is his focus here on this Friday. Tim, we heard yesterday the Biden team and administration really laying down what they were going to do specifically. There were 10 executive orders signed when it came to handling and managing COVID-19 and the pandemic and the vaccine. Today, it was about the economy.
Yeah, today about the economy and specifically executive actions to boost food assistance for impoverished Americans and use federal contracts as a step toward the proposed nationwide minimum wage hike. Remember, that's up to $15. That's what he's looking for as part of his economic plan. And also kind of give a restoration of rights for federal workers who were stripped by his predecessor, Donald Trump.
Right. And let's be fair that this is, as our team, Justin Singh, Katya Dmitrieva, and Eric Wasson write, while consequential for those affected, these two executive orders, the measures offer a shadow of the relief included in Biden's $1.9 trillion COVID-19 aid plan. And listen, that's the focus of their plan, but you've got to get congressional support to get that through.
And that's exactly what Eric Wasson was telling us right before Biden went up there. I mean, the fact of the matter is $1.9 trillion is a big price, and Republicans are already expressing their skepticism. So Nancy Pelosi signaling that she wants to use some budget reconciliation in order to get some of this through.
And that skepticism playing out in the financial markets. Let's get another check on that trading day. Let's toss things over to Charlie Pellet.
All right, I thank you very much. 35 minutes to go ahead of the closing bell right now. We are looking at a mixed day. NASDAQ pushing higher, up 19. Let me give you the numbers. We'll give you the why in a moment here. S&P down 4, lower little change, down by 0.1%. And the Dow Jones Industrial Average down 113 points, drop there of just about 0.4%. NASDAQ could see a record today for the year. NASDAQ now up by 5.1%. 10 years up 6/30 seconds, 10-year yield 1.08%. Gold, spot gold down 0.7%. Right now, spot at $18.56 the ounce. And West Texas Intermediate crude down 1.9%, $52.14 a barrel. Stocks edging lower after closing at records. Investors growing anxious that the virus will hamper growth for longer than expected, and Democrats may struggle to get a nearly $2 trillion spending bill through Congress. Bottom line, equities recovering off their lows, well off their lows. S&P down 4 now, down 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. One story we wanted to get to, it's in the magazine. It's the Year Ahead issue, as we've been talking about. This story in the business section, and they cover, Tim, essentially a list of consumer companies and stories that you need to keep your eye on in 2021.
Peloton is one of those companies. And look, if you don't know that you need to keep your eye on Peloton right now, then you weren't paying any attention.
Where have you been?
In 2020. I mean, this couldn't have been a better few months for the company.
Exactly. They've seen an incredible rise in demand in their services, and the stock has shot up as a result. But now they've got to think about the steps, and are taking them already, for planning for life beyond the pandemic. So let's get into it with Bloomberg News corporate finance reporter Jack Pritchard. He is on the phone in New York City. Jack, good to have you here with Tim and myself. Peloton, check. Success story of 2020. Now it's like, okay, what's going to happen in 2021? I think we all wonder.
That's the question. You know, they're on a 400% rise over the last year. That's going to be hard to sustain. But all of their executives we're talking to, they're very excited about the company's prospects. They say they've got 1.2 million paying subscribers right now, and they think it couldn't be that long before they get up to 20 million subscribers. They're all very bullish. They're all very excited. I think the question is going to be, is some serious competition going to come in? Right now, there's some smaller, cheaper bikes that consumers aren't really as excited about. But if a big player like Amazon or Apple decided to come in and undercut them on their expensive equipment, that could be the danger going forward.
So, yeah, what would that look like? Because, I mean, if you talk about the competitors that exist right now, I think of names like Echelon, even, Nordic Track is sort of going for this as well. But Peloton invented this category of the bike at home.
And the interactive component of it, that you can actually be like.
It's also sticky.
But being in a class and actually being there, but being at home, I think they've taken it, Jack, to a whole other level.
They have, and that's what's really helped them so far. They kind of have this Apple effect going, where there are competitors out there, but their product is better. People like it better, and people want to be on what their friends are on. You can take classes at the same time as your friends. You can compare your performance to your friends. They have that kind of social media aspect coming in, and that's been helping them out a lot. The other thing is the popularity of their instructors. That's been such a big thing with the fitness boutiques that popped up in New York a decade ago. People came for specific instructors that they liked their classes. And Peloton's really focused on their instructors, and they've been kind of able to capture that. People are coming there specifically to take classes with the instructors that they like that other platforms don't have.
Well, you have in this piece some just eye-popping figures in terms of how much instructors are paid. Talk a little bit about this. We're talking, I mean, 6 figures is like baseline.
Yeah, Peloton recognizes the importance of its instructors to what it's doing and pays them really well. We're hearing some of the instructors, the more senior ones, are making upwards of $500,000. And the other thing about this company is the founder was really big on giving employees equity early on when it was founded 5-6 years ago. And with the stock doing what it did in the past year, you have a lot of employees and a lot of executives who have made a lot of money on their stock options.
$500,000 a year.
That's incredible.
Peloton instructor.
That's real money.
Yeah, that's real money.
Peloton knows how important those instructors are to what it's doing. And they recruit and pay them well.
Right, because listen, absolutely, it's like it's a social event. It's like social media, right? You tune in or take a class because it's somebody that you want to be with, and it's no different, I feel like, than media, whether it's like our broadcast here or our podcast, like, right? You connect with it, right? And Jack, that has elevated it to just another online fitness app or another workout place that you go to that, oh, maybe, you know, it's like this, like, I don't care who the instructor is, right? Kind of thing.
Exactly. That's a huge component of keeping people involved with it. One of the things why they're excited about the future prospects of the company, their numbers on people continuing to take classes after they bought the bike, even after the first year, are really strong. Right. I think a big component of that is the instructors. People like the instructors. And another thing helping them out probably is that people are making this investment on this $2,000 or $3,000 piece of equipment. They then feel like they need to keep using it and keep paying that $40 a month subscription fee.
Right. So you have that kind of revenue source every month, right? You know that gives the company a certain amount of visibility. How key is it, though, that they continue to innovate, offer new pieces of equipment? How key is it that the digital alone just continues to grow?
The digital's been big, but they're pushing into other equipment areas too. They're offering this new treadmill. It's even more expensive than the bike, but they think the treadmill is important. They've said there are many more runners out there than there are cyclists, and that will probably be a big part of what they're doing going forward. They also just made their biggest acquisition to date last month for about $500 million. They bought an exercise equipment manufacturer that should help them start making some more of those treadmills, making more of their bikes, and helping meet the demand that there's been for those.
I mean, their revenue growth numbers, you just go to the FA page on Bloomberg, and from quarter to quarter, it's just been pretty phenomenal. Hey, Jack, really cool story. Thank you so much. And that story is in the current issue of Bloomberg Business Week magazine, which is all about the year ahead and one of the consumer companies that you've got to keep an eye on. Bloomberg News corporate finance reporter Jack Pritchard on the phone in New York City. Really cool stuff. I said pitcher.
You love your Peloton, right?
I think it's a really incredibly made piece of equipment, full transparency, and bought it before they were public.
And look, I think what's so interesting about the company is the way that people, they say cult of Peloton, right?
Yeah, exactly. You're definitely kind of all in on the community. All right, speaking of our community, let's check in with Charlie Pellet, get another check on the trading day. Hey, Charlie.
Well, hello there. Almost thought you said cult of Pellet. We've got Peloton shares up now by 0.9%. So far this very young year, Peloton shares have advanced 5.16%. It is an up day for NASDAQ, a down day for both the S&P and the Dow. 27 minutes to go ahead of the closing bell. Stocks edging lower after closing at records. Investors growing anxious that the virus will hamper growth. S&P down for the first time this holiday shortened trading week. Lower by 3 right now. Little change, down less than 0.1%. The Dow down 105. Drop now of 0.3%. But NASDAQ is advancing. Could see a record up 24 points now, up by 0.2%. 10 years up 6/32. 10-year yield 1.08%. We've got gold down 0.8%, 18.55 the ounce. West Texas Intermediate crude down 2%, 52.08 for a barrel of WTI. Chinese e-cigarette maker RLX Technologies surging today in its trading debut after raising $1.4 billion in its initial public offering. Its shares up today by 143%. Johnson & Johnson says it has sufficient data from its late-stage COVID-19 vaccine trial to begin analysis soon. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health, and he says he's looking forward to seeing the data on J&J's vaccine.
So the caveat is we still haven't seen the clinical efficacy data, but a single-dose vaccine, and especially one that doesn't have that cold chain that the Moderna and the Pfizer vaccines require, will really improve our ability to vaccinate people. That will allow us to go to more remote places. It'll allow us to set up more vaccination centers because we won't have those limitations of having those very cold -70 °C freezers around to make sure that the vaccine is stored appropriately before giving it.
And Johnson & Johnson shares up today by 1.3%. The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. This is Bloomberg.
I know you're searching for an answer. Oh my God. Little Paul McCartney, Little Wings. Yes, Paul McCartney was in a band before Wings. What?
Carol's schooling me over here. Keep it going, Carol.
You knew who that was?
Yeah.
No, he didn't. Oh my God. Sir Paul?
It doesn't even sound like
I'm
him.
harding you because I really do adore. All right, Dave Wilson. Come on in. Come on in.
Dave, you've been quiet.
Yeah.
Well, I'm just letting you sort of go on a bit. And then I'll point
save
out, I
me,
actually wanted
Dave,
the
save
studio
me.
version of that song, which is even quirkier.
Why?
And was on McCartney 2.
Okay.
40 years ago or so. And in the last couple of months, we've got McCartney 3.
What's McCartney 3?
It's his latest album.
Oh, have you heard it? I haven't listened to it yet.
Bits and pieces of it.
Okay.
I mean, the thing is about McCartney 2, and McCartney 3 is he did everything. He played all the instruments. He wrote all the songs, you name it. So
I saw a fun interview. I think it was with him either on CBS Sunday or something where he talked about that. He's like, I'm home. I got, I'm doing it all, which is kind of fun.
Absolutely. He's got to figure out something to do with his time. In any case, what's coming up?
That's what I do in my spare time is I just do an album and play all the instruments.
Oh, yeah. Sure you do.
Hey, I have to ask you something. You have to do the chart. I was thinking about you with Bruce and the inauguration. You watch?
Oh, yeah. Well, I certainly saw him open up with Land of Hope and Dreams.
It was pretty cool. It was pretty nice. All right. All right. They're yelling at me because you got to do your chart. What do you got for us?
You're darn right I do. And, I got to talk about what's coming up, which is basically the weight of smaller companies in the broader U.S. stock market. And a way to tell this, I found it in a Twitter post yesterday from Callum Thomas, who is the head of research at Top Down Charts. And what he did is he looked at the total value of the S&P Small Cap 600 index relative to a composite called the S&P 1500. It also includes the S&P 500 and the mid-cap 400. So it's a relatively broad gauge of U.S. stocks. And when you run the numbers, you find out last May, the small cap companies only accounted for 2.1% of the value of this composite index. And that was the lowest level in more than 4 decades, according to Thomas. Our data goes back to the mid-1990s. It was certainly the lowest level there. But what's happened as we've seen smaller companies kind of come back into favor a bit lately is that there's been a reversal. I mean, the chart really kind of focuses in on it. We're up to 2.7%, which doesn't sound like a whole lot of change, but considering
how small cap companies are, right?
Yeah, exactly. Considering you had a peak back in 2006 at a bit more than 4%, it's significant. And if you haven't seen the chart already, you won't know just how significant. So if you want to take a look and get the explanation and everything else I do going forward, send me an email. It's dwilson@bloomberg.net. Yeah, I'll say that address one more time, dwilson@bloomberg.net.
You just said it twice because we were playing around, weren't you?
Whatever works.
Bruce said he was pretty cold, too. I mean, it was interesting seeing everybody in and around the Lincoln Memorial. It was pretty chilly there in D.C.
Yeah. But I remember it was kind of chilly when Barack Obama was inaugurated too, and they had an outdoor event.
Well, look, that's what happens in January, guys. It's January. Come on.
That's what happens in January. Where were those outside heaters?
I know.
Everybody had bought them up already, I guess.
Government couldn't even get any.
All right, Dave Wilson, I know you'll be back a little bit later on with your stock of the day. Much appreciated. Dave Wilson there. All right, back to World and National News, back to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. President Biden says it is crucial to provide additional relief to families who've been struggling to make it through the pandemic. He signed additional executive orders this afternoon that will call for more food assistance to be directed to the hardest hit.
This cannot be who we are as a country. These are not the values of our nation. We cannot, will not let people go hungry.
He says lifting up the poor will help the nation's economy recover faster than if we do nothing more. He says we as a nation have the tools to help people, and he says we need to use them, and quickly. Well, the Senate is giving a green light to retired Army General Lloyd Austin as Secretary of Defense. Austin was easily confirmed today.
The yeas are 93, the nays are 2, and the nomination is confirmed.
Austin is one of President Biden's top cabinet picks and becomes the first African American to lead the Pentagon. Biden's Treasury pick, Janet Yellen, is also expected to receive a speedy confirmation vote in the Senate, possibly by this afternoon. Baseball legend Hank Aaron died today at the age of 86. The Hall of Famer was born in Alabama in 1934 and recalled the tough start he faced breaking into the game.
My first year that I left Mobile, Alabama, $2.50 in my pocket, and my mother told me that was all she had to give me, and be very careful with it.
Hammerin' Hank, as he became to be known, broke Babe Ruth's home run record of 714 home runs in 1974. He finished his career with 755 total home runs. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Okay, this is when I say, whoa, whoa. GameStop, up 40% today.
142% so far this week.
Wait, what?
Yeah, exactly.
There's a little battle.
You said it's up. What is it up right now? I don't have
40%.
So
it was up as much as it was up almost. Sorry, but it was up almost 80% today at its highs, but now it's up 40%.
Wow.
So I guess we've got a battle between short seller Citron Research and an army of Reddit charged day traders because this stock is getting talked about a lot. It's at an all-time high, and it's just, I don't know, is it just all the conversation that's going on? Is there real fundamentals behind a move like that?
Look, I'm going to definitely talk to Sarah about this a little later when she joins us. But it has to do with Reddit and the way that people are talking about it online. Reddit users continue to pump up their bets, with one user saying they relied on it to pay their student loans. At one point today, it was the most actively traded U.S. company with a market value above $200 million, according to data compiled by Bloomberg.
Right. And we've already had, I think the stock was halted twice in New York trading today. So we've already seen that happen, right? Yeah. After jumping 70%, we saw it halted. So anyway, so the Reddit folks have been really positive, right? Then you have Citron coming out and I think kind of critiquing shares. They put a tweet out on Tuesday. They made plans for a Twitter live stream the following day. So this is kind of a back and forth between the bulls over in Reddit who like it, and then Citron being like, what?
Yeah, Citron, Andrew Left from Citron Research says, quote, "We are investors who put safety and family first, and when we believe this has been compromised, it is our duty to walk away from a stock."
Yeah, he said, he put out a YouTube video, and he said he did 5 reasons why he thinks shares of GameStop will, quote, go back to $20 a share. Listen, somebody's going to win or somebody's going to lose big time right here.
It doesn't end well for everybody.
But those are big, big moves and a lot of activity in that name specifically. All right, we'll talk more about that with Sarah. That's coming up on Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are trading mixed. S&P little change. Choppy session. NASDAQ at a record. Let's head right over to the first word breaking news desk for today's afternoon call, the Friday edition. And here he is, Bill Maloney.
And good afternoon, Charlie. That's right. Like you said, U.S. stocks are trading mixed today, although off their lows. Dow's currently down 100 points. S&P's down 3. NASDAQ is higher by 32. The U.S. 10 yield at 1.09%. Gold is down 14, and transports dropped 26 points. Among the main 11 S&P sectors, only real estate, utilities, and telecom were in the green. Financials were under pressure. And leaders to the upside in the Dow, Apple and Salesforce, while IBM and Intel plunged after earnings and led to the downside. Also after earnings, Seagate fell 5%. And in deal news, AT&T is up on a Reuters report. It's in talks to sell its DirecTV stake. And wrapping things up, GameStop soared as much as 78% before paring gains. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, I thank you very much, Bill. And to hear live breaking news over your Bloomberg Type Squawk SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
It is time for the drive to the close. Bill Smead is back with us, CEO and Chief Investment Officer at Smead Capital Management. And I got to point out that the Smead Value Fund beating just about all of its peers so far this year, most of its peers over the past 3 years. It's in the 99th percentile for its category, according to Bloomberg data, over the past month and year to date, returning 9% over the past month. Bill is with us on the phone from Portland, Oregon. Hey, Bill, nice to have you here. How are you?
Doing well. Nice to be with you.
Crazy couple of weeks to start off the year. And I do wonder, listen, you focus on a portfolio of, in many ways, of who's who of corporate America, you know, names like Target, Discovery, Amex, Lennar. Anything changed in your strategy because of kind of the political craziness that we saw in the first 2 weeks of the year, and then now that we have a new administration, are you thinking about the markets? Are you thinking about investing any differently?
No, not any differently, but definitely thinking about the way economics are changed by the political climate. And you know, I heard Charlie, in your market update, people say real estate's the best performing category today. For example, it would not be outside the realm of those of us that have been around a long time to look back at the 1970s and what did well back then when the baby boomers were this huge new population group forming households, and we all wanted the same things at the same time. And in the 60s, we had massively increased government spending to fight a war in Vietnam and to battle poverty in the Great Society at the same time. And you put all that government money together with, at that time, 79 million baby boomers, and you got double-digit inflation out of the deal. Well, this time we got 90 million millennials, and we're trying to get us out of this pandemic funk with massive government spending. And are we going to have something different? The one nice thing for us in the competitive stock picking landscape is I was around in the 70s, so I know what that looks like.
And what does it look like in comparison to what you expect happening in the near future here?
Well, let's just use one example. I think of the movie Gone with the Wind. When things got really difficult in Gone with the Wind, they show Scarlett O'Hara, and she can hear her dad speaking to her in her mind. She's going, "Go back to Tara. It's the land. The land is the only thing that lasts." So, you know, today real estate's up because they don't make more of it. and we're trying to sort out where people are going to live.
Yeah.
But it isn't going to change what the most attractive suburban areas of the country are. It will change where we live, but it won't change what is attractive. And we own two mall REITs, Simon Property and Macerich, that owns a lot of the most attractive real estate in the most attractive suburbs, in the most attractive places in the United States. And we just can't see that not sorting out in a favorable way because the property, it's the land.
Well, location, and just kind of a deep tease here. We're going to talk a little bit later on our broadcast, the top 10 housing markets to watch in 2021. And we'll do that a little bit later. But, do you, like you said, you like the REITs that you have specifically? Safe to say, though, that there is going to be some real estate fallout because companies maybe aren't going to have as much corporate space because they're realizing that we can have workers work from home. I mean, there will be some fallout, no?
There could be, Carol. We're not very good at guessing those kind of things.
Yeah.
But yet the psychology could tell you something. And I think it's safe to say that in the last 3 months, we reached a pinnacle of people becoming convinced that everyone was going to use a Peloton and everyone was going to work from home and nobody was ever going to come back to Manhattan and nobody was ever going to come back to downtown Seattle or downtown Portland. So we reached a kind of a maximum pessimism about that. And we haven't done anything in that area, but I think some very smart people probably are. And over a 5-year time frame, they're probably going to do really well. See, my experience with work from home is I interact with a lot of businesses, and I personally am getting way worse service from businesses with employees working at home than I did from business. Oh, yeah. There's no question about it. I can think of a lot of different categories, but for example, I have flown more than other people. And all the employees, for the reservations and everything work at home. And I've rented cars, and trying to get a hold of somebody sometimes is like an act of Congress. And so my gut feeling is I focus on that Progressive commercial where the guy is teaching people how to act like their parents because they're going to do that anyway, right? The guy puts his hands on his knees before he sits down in the chair. I about died laughing when I saw that. That's how my dad sat down in the chair, was he put his hands on his knees and then he'd sit down in the chair. Well, we're not going to have to teach millennials to act like their parents. They will. And the beauty of it is this massive number of 30 to 45-year-olds are buying stocks on Robinhood, et cetera. And their best investment is going to be buying a home and using a forced savings program.
Well, this explains why you like Lennar. It explains why you like D.R. Horton, right? Those are two plays. You also just got about 40 seconds here. You say oil is automobile, cocaine, and environmental considerations only raise the price for producers. So you like what, ConocoPhillips and a few others. Just quickly.
My outlandish thought of the year is 2 years from now, Joe Biden will be doing a fireside chat with the American public, wearing a cardigan sweater, asking us all to turn our thermostats down because the people in California don't have enough electricity to charge their cars.
Whoa.
All right, we're going to hold you to it, Bill Smead. We'll see where we are in a year. Bill, always fun to talk with you. Appreciate it. Bill Smead, CEO, CIO. He is over at Smead Capital Management, of course, on the phone with us from Seattle on this Friday.
I'm just imagining that fireside chat right now. But, Bill's joining us from Portland, Oregon, so if he's having trouble with electricity in California, they might have trouble with electricity in Oregon, too.
Also, right? Yeah, exactly. All right, stick around, folks. Just about 3.5 minutes left in today's trading session. We're going to count you down to that closing bell. This is Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. There you have it, sound of the closing bell at the New York Stock Exchange, and it is on to the weekend. Folks from Thoma Bravo ringing that closing bell. Record for NASDAQ, move lower for both the Dow and the S&P 500 index. It is a winning week, however, holiday shortened winning week for the S&P. Right to the numbers, we'll give you the why in a moment here. NASDAQ up 12, up by 0.1%, bringing the year-to-date gain to 5.1%. S&P down 11 at the bell, lower by 0.3%. The Dow down 179, down 0.6%. 10-year up 6/30 seconds, 10-year yield 1.08%. Stocks move lower after closing at records yesterday as investors grew anxious that the virus will hamper growth for longer than expected, and Democrats may struggle to get a nearly $2 trillion spending bill through Congress. As for the market outlook, Mike Wilson is Chief U.S. Equity Strategist at Morgan Stanley.
I think the markets are very clear right now in their view about 2021. It is going to be a boom in terms of economic growth. Yeah, we have to get through these hurdles of vaccination and all the hand-wringing around politics and everything else, but ultimately the market is discounting a very powerful recovery.
GameStop closed at a record high, up 51% today to 65.01. Couple of high-profile tech names plunged after earnings. Intel shares tumbled after the incoming CEO pledged to regain the company's lead in chip manufacturing, countering growing calls from some investors to shed that part of the business. Intel lower today by 9.3%. IBM down the most in 10 months after the company reported a greater sales decline in the fourth quarter than analysts were expecting. IBM down by 9.9%. Chinese e-cigarette maker RLX Technologies surged in its trading debut today. RLX up by 145%. Recapping equities mix, NASDAQ at a record, S&P down 11, a drop of 0.3%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Wild thing, think you move me.
I got a few moves I know you'll like.
Shaking all over.
Bloomberg Business Week. Movers and shakers.
Shaking. Let's do it.
On Bloomberg Radio.
All right, time to take a look at some of the trade today. Charlie, of course, breaking down those closing numbers. We did take a little bit of a leg down again here in those last few minutes of trading. Charlie, though, breaking down those numbers. S&P 500, much more of a risk-off trade today. 184 names in the index. Higher today, 321 lower. You looking at the industry groups there?
I'm looking at the industry groups.
What are you seeing?
I'm seeing 3 closing in the green. Real estate, highest performing, best performing. 0.3%. Utilities up a little over 0.1%, as were communication services up just about 0.1%. Financials, though, lagging, down 0.7%. Energy down 0.5 percentage point, as well as industrials down 0.5 percentage point too.
For the week overall, Dow was up 1.3%, S&P was up 2.3%, and the NASDAQ looks like it was a gain of 5%. Is that right?
Record close for the NASDAQ today.
Yeah. So it's been just kind of pushing increasingly higher. Let's get to Sarah Ponzak, our Bloomberg News cross-asset reporter, finishing up the trading week with us. Sarah, what jumps out for you?
You know, your tone in reading the return for the NASDAQ
I thought I was
this week
wrong.
really just got me. But I think that's the feel right now. It's that every day, or at least earlier in this week, we did see larger returns. But a day like today, you see very modest pullbacks. The S&P 500 down 0.3%, the Dow not even down 0.6%, the NASDAQ not even down 0.3%. And you just forget almost that this is a market that is just trading at record highs and continues to gain almost week to week. And yes, we did see a change in the contours. We did see yields today actually move lower. With that, you see bond proxies in the lead, real estate utilities, communication services, as you guys just laid out. But that's not something that's been typical. Those have really been the laggards sector-wise so far this year. So today was a bit of a change.
Hang on a second, because I was just playing around with my screens here. So actually, the NASDAQ is up 5% year to date. This week, though, it gained 3.3%. The S&P this week a gain, yes, higher, but only 1.2%, and the Dow was flat on the week. I just want to make sure I had year-to-date and 5-day numbers kind of playing around here on my screen, so forgive me because I just want to be factual and correct. Go ahead, Sarah, take it away.
Yeah, of course. So let's put it into context. Say we look at the NASDAQ 100, for example. The NASDAQ 100, as opposed to the NASDAQ Composite this week, up another 4.4%. We've had 4 weeks now in this year, if we include the end of January 1st.
Right.
3 of the 4 have been positive. We just continue to push higher. And today, what caught my eye, and I'm sure many others, I'm sure yours as well.
Does
was
it
just
start with G
GameStop.
and end with
Yes,
P?
You stole my question.
Yes, it does. Go ahead and ask the question, Jim.
Okay, well, I'm just wondering what the heck is going on with GameStop, because here we are, GameStop closing at a record high, 51%, $65.01 per share. Explain what happened today.
So to boil it down and give us the short version, you have this battle going on between short sellers, and you have extremely, extremely high short interest in the stock and those on Reddit. My old colleague Luke Howa wrote a story for Business Week early last year on how members of Wall Street Bets, which is now almost this infamous subreddit on Reddit, will go ahead and buy these out-of-the-money calls on highly shorted stocks. And what happens then is it forces dealers to do so-called delta or gamma hedging, and they have to buy the underlying, and it forces then a short squeeze. And I'll give you a sense of the options activity in GameStop today. So if you look at all option contracts traded today, a GameStop call option, a $60 call option expiring today, was the most heavily traded. That above SPY, above Apple, GameStop was the most actively traded option today. At the same time, if you look at the sheer numbers of like bullish call options traded for GameStop today, it exceeded 1 million. That's never happened before. 1 million call options. That is a record by far for option activity on the stock. And it's just mind-blowing to see. And then you see GameStop close up more than 40% at a record $64.75 a share.
Our DES screen says the percentage of float of outstanding shares, 142%. I mean, it's highly, highly shorted, Sarah, as you mentioned. Hey, listen, kiddo, thank you so much. Have a good weekend. And everyone, check out Sarah Ponzak's podcast. It's called What Goes Up. It's with Mike Regan. They do deep dives into the market. You can find it at Bloomberg.com or wherever you get your podcasts. This is Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for a price on Wilson.
Open up the door, it's Dave. Who? Dave.
Hey, Mr. Wilson!
All right, Dave, what's it going to be for your stock of the day today?
It's going to be Magnite, Tim. It's an online advertising technology company that was known as Rubicon Project until last July. The name change was prompted by the company's biggest ever takeover, a $280 million purchase of video software maker Teleria. Now, Magnite was founded in 2007 and went public in 2014. The ticker, after the name change, is MGNI. The shares were sold at $15 each in the initial public offering and fell as much as 90% from there in the first 4 years of trading. They were below the IPO price as recently as November, even though every analyst in a Bloomberg survey had some version of a buy rating on them. Now, Magnite then posted an unexpected third-quarter profit, and its shares began surging. They set a record today after Craig Hallam added to analysts' optimism. The firm raised its 12-month share price estimate by 80% to $45. Now, Craig Hallam became the only firm with a target price higher than Magnite's current market price. The shares drew closer to the target with a gain of 10.5%. That was the third double-digit percentage advance for Magnite in the past 6 trading days.
Is it Magnite what Superman has to watch out for or something?
Kryptonite.
Oh, I know. I'm just kidding. Hey, listen, if you check out the year-to-year returns in this one, it was up 276% last year. It was up 118% in 2019, up 100% in 2018. It is like Kryptonite, although it's Magnite. I'm just going to say, Dave, it's pretty amazing.
It is?
I've never heard of this name.
Nor had I. And that's what Stock of the Day is all about.
So when you're gathering around the family dinner table, everyone, you can talk about this stock.
So you heard it from Dave on Bloomberg Radio. Magnite.
Not to be confused with Kryptonite. You, my friend, have a great weekend.
Thank you. You too. I'm going
Be
to get
safe.
some rest.
Okay, look forward to it and see you on Monday. All right, Dave, thank you so much. You have a good weekend as well. Let's get to World and National News and to Nancy Lyons. Hey, Nance.
Hey, Carol. President Biden says the executive orders he signed today will help boost food assistance for needy Americans and leverage federal contracts to improve pay for low-wage workers.
We cannot, will not let people go hungry. We cannot let people be evicted because of nothing they did themselves. They cannot watch people lose their jobs, and we have to act. We have to act now.
Biden says with 900,000 more Americans applying for unemployment, it is clear the crisis is only deepening. Well, in addition to addressing the fallout from the pandemic, the Biden administration also plans to confront violent domestic extremism. White House Press Secretary Jen Psaki.
The rise of domestic violent extremism is a serious and growing national security threat. The Biden administration will confront this threat with the necessary resources and resolve.
She says the administration will conduct a thorough review of the threat, including the attack on the Capitol. Well, lawmakers are trying to get to the bottom of a situation that had National Guard troops who've been guarding the Capitol sleeping in parking garages. The troops had previously taken rest breaks inside the Capitol itself, but Capitol Police told them they could no longer stay inside. Senate Minority Leader Mitch McConnell says he is glad to hear they've been told to return.
I don't think a single senator feels that was acceptable. I'm glad the situation was resolved, and I hope we learn exactly what happened.
One National Guard member told the Washington Post he felt booted to the curb. First Lady Jill Biden dropped by the Capitol today unannounced and delivered treats to the troops. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Earlier, we talked about the 50 companies to watch. It's in Bloomberg Business Week magazine this week, all part of the Year Ahead issue. And our Bloomberg Business Week weekend show includes an interview with Twilio CEO and co-founder Jeff Lawson. He talks about his new book, Ask Your Developer, How to Harness the Power of Software Developers and Win in the 21st Century. We talked about a lot of things, actually, in the interview. But in this excerpt, he talks about why the book is for more than just software developers. It's for people like you and me. Forgive me, Jeff, but if I'm not a person who's into software, am I going to be like, okay, why do I need to read this book? Why did you write it? Who are you addressing? And what's the message you want to get out here?
This book is written actually for people who aren't the developers and aren't the software people. It's written for the wide variety of business executives who know that software in many ways represents the future of their company, because every company is in this Darwinian struggle to build great digital products and experiences to serve their customers in this era where the interface that we have with our customers is now oftentimes an app on a phone or a website. Therefore, it's the companies that build great software experiences. Those are the companies who win the hearts and minds and wallets of their customers. Because at the end of the day, the technical people and the business executives are all aligned in what they want. They want to build amazing products and experiences that millions or even billions of customers are going to love, that will drive business growth. Yet oftentimes there's this invisible divide between the business executives and the technical talent because they speak different languages.
All right, that was Jeff Lawson. He's co-founder, CEO of Twilio. His new book that's out, Ask Your Developer, How to Harness the Power of Software Developers and Win in the 21st Century. You can hear more of that interview. It's on our weekend show on Bloomberg Radio. It's also on our podcast feed at Bloomberg.com. Listen, Twilio, it was one of the high flyers of 2020. It was up 244%. They had robust demand, incredible sales growth for their products. It's all about B2C, but it's just a fascinating conversation he weighs into on social media and broader tech and their responsibility. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. An up week for the Dow, the S&P, NASDAQ. Record close today for the NASDAQ Composite Index, but a down day for both the S&P and the Dow. Stocks retreated from records as investors grew anxious that the virus will hamper growth for longer than expected. Also, concerned Democrats may struggle to get a nearly $2 trillion spending bill through Congress. Today, the S&P dropped 11 points, down 0.3%. The Dow down 179, a drop there of 0.6%. NASDAQ up another 12, higher by 0.1% for the week, by the way. NASDAQ up 4.2%. To put that in context, S&P this week up 1.9%. 10-year down up 6/30 seconds. 10-year yield 1.08%. Spot gold 18.53 the ounce, down today by just about 0.8%. And West Texas Intermediate crude down 2%, 52.07 a barrel. Bernie Sanders meme-worthy inauguration coat selling out. Burton Snowboards, that's the Vermont outerwear company that made the coat the senator wore at Joe Biden's inauguration, said its website had been inundated with visitors in the past few days. I'm Charlie Pellet. That is a Bloomberg Business Flash.
We have a new influencer, huh?
There you go, Bernie Sanders. And I would almost say who would have thought, but no, Bernie Sanders has always been, exactly, why not?
Yeah, exactly. Gotta love it. All right, Charlie, thank you so much. So that's what's trending when it comes to social and retail. One of the most read stories, though, on the Bloomberg today is about if you're selling an apartment in Manhattan, well, get ready for a long ride. An apartment in Manhattan, it's taking longer to sell, while residential properties in Brooklyn and Queens are clearing in about half the time. So let's broaden it out a little bit for you. And we've got the list of the top 10 housing markets to watch in 2021. Here with more, Ali Wolf, chief economist at the housing industry advisor and data provider Zonda, the group on a mission to advance the home building industry. And it's all about tracking trends as well. Ali joins us on the phone from Irvine, California. Ali, good to have you back with us on Bloomberg Business Week. Tell us about this list you have. And first of all, how did you compile it? What were the statistics you were looking at to come up with those top 10 markets to watch this year?
Yeah. Hi, Carol. Good to talk to you again.
Yeah.
So this was a really fun and challenging list to put together because, as we know, the pandemic has transformed housing. We're seeing the best sales since 2006. And when you try to pick out 10 markets, you could almost point to any market across the country, and it could be a top market that's expected to grow. So what we did in this list is we said, you know, Bozeman, Montana is doing great, and Phoenix, Arizona is doing great, but Phoenix is huge and Bozeman's small. We don't want to take those two extremes. We want to find those mid-sized markets that are growing today, and they also have the infrastructure in place to enable them to continue to grow. So we looked at emplanements, so just basically the airport size, the interstate highway system, affordability, the labor market, and home sales.
Well, and I have to say, in the last year, visited a niece of mine who's in Salt Lake City, and I don't know what I expected, but it was charming and gorgeous and easy to get in and out of. And turns out Salt Lake City, it's number one on your list.
Salt Lake City is so strong. It's the only one we have in the mountain region. But when you go, I think to your point about charming, another interesting thing about Salt Lake City is you can find family homes. So you can find those large 4 or 5 bedroom homes at a reasonable price. But they also have really cool California infrastructure, design. Mm-hmm. And so the homes, you can find a 2-bedroom home. You can have a house with a rooftop deck. So they just have so much variety there as well.
It's my niece Rayanne. I'm going to give her a call out here. But what's interesting too is she was in an area where she could walk. She could walk to a park, and there was a great downtown area to go have some coffee or some cool restaurants. It was pretty cool. Let's talk about. I want to do the top 3. Number 2, Nashville, which I've not been to, and everybody's like, I can't believe you haven't been there because it's so interesting and so much fun.
Yeah, so Nashville, when you look at just going to the infrastructure basis, you are so well connected if you get on the road to all of the different parts of the Northeast, the Midwest, the Southeast. So great connectivity, a relatively large airport, and no income tax. This has been a really, really big in-migration market throughout this year as people are going and they're looking to take advantage of a relatively lower price point, better bang for buck, and a pretty cool lifestyle.
Yeah, and I think people, especially coming off of COVID, I think people are thinking a lot more about their home, their space, their lifestyle, especially if there will be that flexibility where you can work from home if an employer allows it, that you know, where you can live is certainly broadened out. Number 3, Raleigh.
Yeah, and I want to jump on your work from home because that's honestly the component that has turbocharged the housing market. And just know that we're 10 months through this work from home time where people are more likely, if they can work from home, to be working from home. We still have another 5 to 10 months to go, depending on the vaccine roll-up. So that continues to give some support to housing. But Raleigh is a diversified economy and continuing to diversify. Again, really cool. My mom moved to Raleigh recently, to use an anecdote as well, because she liked the 55-plus communities. There were communities that were designated towards her. She was able to take some equity. She lived in Washington, D.C. So if you have people migrating from more expensive areas, they can bring money with them, and then they can end up maybe not even having a mortgage payment.
Yeah, a lot of people retiring down to the Carolinas in general, both south and north. Also on the list of this top 10 of medium-sized markets to watch during 2021, Florida's West Coast and Florida's East Coast. We have talked, first of all, so much about people moving to southern Florida, specifically when it comes to like the financial community. What are you guys seeing, though, about Florida's West and East Coast?
Well, and honestly, we kind of laughed when we put together this list because we basically said we should have just done the entire state of Florida. Because
Fair
Florida,
enough.
it almost doesn't matter where you are.
Yeah.
Even interestingly, we don't even have Orlando on our list, but Orlando is a market that people wrote off because of all of the pain at Disney. And Orlando's still doing really well because of the Space Coast and higher income individuals. But Tampa basically never slowed down when the rest of the nation probably had about a 2-month pause in home sales. Tampa basically didn't. So you still have that Midwest feel. You have great connectivity. I think it's because the highway connects north and south. Tampa's great. Jacksonville, another one of the markets that the economy is just diversifying so much.
I feel like that common thread, though, through a lot of these places is no income tax, and people are thinking more and more about that. Listen, Allie, it's a great list, and you really teed it up well for us and explored it. Thank you so much. Happy New Year, and have a great weekend. Allie Wolf, Chief Economist over at Zonda, on the phone from Irvine, California, walking us through those 10 medium-sized markets to watch during 2021. Coming up, we're going to wrap up our day, wrap up our week with a real treat. And we're going to check in with the team, the folks over at Martin Guitar. We're going to check in with the CEO of the Martin Guitar Company. That's coming up next on Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yeah, you're listening to Bloomberg Business Week. We're getting ready to wrap up, but we've got a treat before we do that. We're going to check in with Chris Martin. He is the CEO of the Martin Guitar Company. It's a family-owned business, and I know it well. It's one of my favorite guitars of my husband's, but we're going to get into it in just a moment, talk about the business and what they've got going on. First up, though, let's get back to Charlie Pellet, because I'm seeing some headlines across the Bloomberg here.
Involving Morgan Stanley, and who set Chairman and CEO James Gorman's 2020 compensation at $33 million. That is up from $27 million. Morgan Stanley shares declining today, down by 0.8%. It was a mixed day on Wall Street. Record for NASDAQ, move lower for both the Dow and the S&P today. Stocks slipping from records as investors grew anxious that the virus will hamper growth for longer than expected, and Democrats may struggle to get a nearly $2 trillion spending bill through Congress. Subhadra Rajab is head of U.S. rate strategy at Societe Generale, and she was interviewed this morning on Bloomberg Television and Radio.
What we're in right now is a K-shaped recovery where the lower strata needs a lot of support. And the stock market is definitely starting to react on the back of the stimulus.
S&P down 11 today, a drop of 0.3%. The Dow down 179, down 0.6%. NASDAQ at a record up 12, 13,543 on NASDAQ, up today by 0.1%. Gold down 0.9%, 18.53 the ounce. Spot gold there, the 10-year up 6.30, 10-year yield 1.08%. And West Texas Intermediate crude down 2%, 52.04 a barrel. Next week's going to be a busy one for earnings, especially in tech land. We'll be hearing from Apple, Facebook, Tesla, Microsoft, and AMD among some of those stocks today. Apple up another 1.6%, Facebook up 0.6%, Tesla up 0.2%, Microsoft up by 0.4. Recapping, stocks mixed, S&P down 11, down 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week, and this is And I pulled into Nazareth. That has to do with Martin Guitars and where the company is based. And Robbie Robertson of the band, he revealed, I think a few years ago, that he was sitting around in his Woodstock home with his Martin guitar looking for some inspiration, and he looked inside his guitar and saw the words "Made in Nazareth." And so a song and an iconic lyric was born. Speaking of iconic, the Martin Guitar Company, they have been making guitars for, well, nearly 2 centuries. Established back in 1833. They just announced the release of 2 new guitars as part of the National Association of Music Merchants Believe in Music Week's virtual event, which wraps up today. So let's talk about that. Let's talk about this iconic guitar brand. Chris Martin IV is the CEO of the Martin Guitar Company. He is with us on the phone, not from Nazareth, but from Bethlehem, Pennsylvania, and he joins us here on Bloomberg Business Week. Hey, nice to have you here, Chris. Welcome.
Thank you so much.
So I have to ask you, first of all, are you 6th generation for the company, running the company?
I am the 6th generation. I'm C.F. Martin IV. 2 of my ancestors were named Frank for some reason.
Okay, because I was doing some research and I was trying to make sure I had the count right. How are you, and what's the past year been like for you guys?
Well, Pennsylvania, the governor basically shut the state down in about a week. So every day it's like, okay, tomorrow we'll do this, and then tomorrow was like, oh no, we're going to do this and this, and by the end of the week we were closed. And I said to my colleagues, because I've been through guitar booms and busts for a variety of reasons, often economic, sometimes cultural, and I said, all right, let's just go for break even. If we can, we'll bring the business down. We'll unfortunately, we'll have to lay off a bunch of people. They'll get unemployment,
right,
and we'll go to break even. And then all of a sudden, the phone started to ring. And it turns out that when people were stuck at home,
they really wanted to buy a guitar.
Was that April, May? Like, how quickly did that start?
So February, March.
Okay.
By April, we kept petitioning the governors, like, Governor, people want our product. Can we go into the warehouse? Can we just get a half a dozen people into the warehouse to ship the product that's on the shelf? Mm-hmm. And they said, okay, only a half a dozen. With protocol, wear a mask, take their temperature, social distancing.
Right.
And then we put together a protocol. We have a 40-page book about this is the way we're going to reopen the business. And we showed that to the state of Pennsylvania, and they said, all right, you seem to be serious about wanting to get back into business. And I think that'll help allow the state of Pennsylvania to say, hey, some of these firms that are really trying to be diligent about the virus should go back to work. So I've been working from home, but my dedicated colleagues who actually make the guitars are in the factory making guitars because we're back ordered.
Okay, so let's talk about the kind of demand that you've seen. You're back ordered. Yeah. Tell me what normal orders in a non-pandemic world were like for you guys, and then what it's been like post-pandemic, and everybody's like, I'm home, I want to play guitar.
Yeah. So, you go from Obama to Trump, the economy's been pretty good.
Yeah.
And so, we benefit, and people have some discretionary money. But this demand, and it's not just Martin, it's everyone who makes some kind of musical instrument that you can play at home. Right now, they're back ordered. We're all scrambling. We're all like, okay, we're trying to catch up. And the real challenge is to allocate the scarce product that we have uniformly across our customer base around the world.
Right. Well, that's interesting, right? Because you had global demand. How many? Give me an idea. We're, Bloomberg. We're into, how many guitars? And I know you guys have a bunch of different guitars, but how many can you produce in a week? And is it all handwork, or it's a mixture of hand and?
It's a combination.
Yeah, that's what I thought.
My family's business has always respected technology. And one of my competitors, I will say this honestly, Bob Taylor, got a jump on us in terms of using computer numerically controlled routing machines, which really make the early part of the manufacturing process very efficient. And we got religion. So I often joke when I give a factory tour that my ancestors, if they could come back and see the factory that they left me, their head would spin. But they are put together by hand.
Right.
No one. I don't care where you make guitars. No one has invented the guitar put it together machine.
We're showing for our folks who are watching on our YouTube channel, our Bloomberg Business Week YouTube channel. You can see some of the manufacturing and the handwork that goes into it. Just quickly, then we'll come back and talk just 10 seconds. So, how many guitars do you kind of make in a week?
So let's say day by day. Right now in Nazareth, I think we're trying to get 185 out. We're going to go to a second shift. We're training the co-workers on the day shift, and in a week or two, we're going to ask them to, because we hired them to go on nights. We said we're going to train you during the day. And we have a factory in a town called
Chris, you got to hold on for a second because I do have to do some news, but we're going to come back and pick up on this conversation. We'll get back to Chris Martin of the Martin Guitar Company in just a moment. Let's toss things over to Nancy Lyons and news. Hey, Nance.
Hey, Carol. President Biden is touting new executive actions that deal with the economic impacts of the coronavirus outbreak. He says the crisis is only deepening.
This is an economic imperative, a growing economic consensus that we must act decisively and boldly to grow the economy for all Americans, not just for tomorrow, but in the future.
One executive order is intended to boost food access for needing families. The other strengthens government worker labor protections. Well, Senate Majority Leader Chuck Schumer says the chamber will soon receive the article of impeachment against Donald Trump.
I've spoken to Speaker Pelosi, who informed me that the articles will be delivered to the Senate on Monday.
Senate GOP leader Mitch McConnell had wanted a three-week delay in that trial. Well, it's been offline for weeks in the aftermath of the Capitol riot. Now a social media app that's popular with Trump supporters and conspiracy theorists is turning overseas for help. Bloomberg's Nathan Hager reports.
Parler is working with a Russia-based company called DDoS Guard to try to get back online. That's raising concern its millions of users could be prone to Russian intelligence intelligence. DDoS Guard has contracts with several Russian government entities, and Russian telecoms are required to provide backdoors for state intelligence. Parler was cut off from Amazon Web Services 5 days after the Capitol attack. That's after Amazon determined the social platform failed to moderate content that led to the January 6th riot. Nathan Hager, Bloomberg Radio.
Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. I mentioned during the week that this next individual, he is a modern Renaissance man, a journalist, a communications consultant, worked on Barack Obama's presidential campaigns. He's a digital media producer. He has his own company, Boots Road Group, and he's got a book out called Patriots of Two Nations, Why Trump Was Inevitable and What Happens Next. We're talking about Spencer Critchley. Caught up with him this week, and here's a little snippet of the conversation where he talks about how we can overcome the divisiveness that's currently in our country. Check it out.
The first thing we have to do is reestablish this sense of shared values. I think that if we think too much at the tactical level, we won't get there because we're kind of lost. Our dispute really takes place over tactics and policy details and charges and countercharges, and it ends up deepening the division and increasing the loss of trust. And when you're as divided as so many Americans are right now, the first thing to do is reestablish shared values to reestablish trust, because people really only listen to people that they trust. And if you've lost trust in each other, it doesn't really matter what you say, how valid it is. It's just not going to be heard or, given any weight with the lack of trust. And this is one reason why I think Joe Biden was quite possibly the best choice the Democrats could have come up with for this time in history, because it's such a strength of his. Because aside from his other qualifications, and I think he's actually one of the most highly qualified on paper presidents in our history, perhaps his most important quality is he's a thoroughly good person, as everybody who's been around him for any length of time knows and will tell you. And leadership is not about what you can impose on people, ultimately. It's about what you can summon from them.
And that's former communications consultant Spencer Critchley, worked on Barack Obama's presidential campaigns. His book, Patriots of Two Nations, Why Trump Was Inevitable and What Happens Next. He's done a lot. Check out, though, that full conversation, very thoughtful and a deep dive into terms of what is going on politically in our country. You can find it on our podcast feed at Bloomberg.com. It's in our weekend show. Check it out, everyone. This is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business
From
Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a headline from the Bloomberg Professional Service. The payments firm Flywire is planning to IPO at a $3 billion evaluation, this according to a Reuters report. Stocks slipped from records as investors grew anxious that the virus will hamper growth for longer than expected, and Democrats may struggle to get a nearly $2 trillion spending bill through Congress. It was a holiday-shortened trading week, and it was an up week for the Dow, the S&P, and NASDAQ. Today, NASDAQ ended the week heading into the weekend at a record. Let's begin there. NASDAQ up 12, a gain of 0.1%. S&P retreated down 11, a drop of 0.3%, and the Dow Jones Industrial Average fell 179, down by 0.6%. 10-year up 6/32, 10-year yield 1.08%. Gold down 0.8%, 18.54 the ounce. Spot gold there. West Texas Intermediate crude down 2%, 52.09 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Got it, Charlie. Thank you so much. I want to get right back to our guest, Chris Martin IV. He's the CEO of the Martin Guitar Company. They are based in Nazareth, Pennsylvania. He's on the phone from Bethlehem. And Chris, my apologies. The computer would have taken me out if I didn't do it. So you were talking about, because I love to get an idea of a business like yours, and you say you respect technology, and so it's a combination of technology and people putting the guitars together. I think you said you get about 185 out in a week. Talk to me a little bit more about that.
Well, we have two factories. We have the main mothership, I call it, in Nazareth. My great-great-great-grandfather started his business in Lower Manhattan.
Right.
And in 1839 moved to Pennsylvania. And then early in my career...
Hudson Street, if I recall, if I read it right.
Yeah, we opened up a sister facility in Mexico, a maquiladora.
Yeah.
And so at that facility, we make all of our Martin guitar strings, and we make what I'll call a medium-priced Martin guitar. And so we actually do more volume because the price is lower. So we're doing about 400 units out of that factory a day.
Wow, that's
pretty... I don't know where they're all going, but they're going somewhere.
Well, it's interesting. So what do you expect? Do you anticipate, I mean, you've got to feel good about the demand that we're seeing. You wish it was not against a health pandemic. Right. But I think one of the things that we ask about a lot of businesses is, do you anticipate that this continues? Because once the world opens up, right, all of a sudden we have a lot of challenges for our time again.
So, yes. A good friend of mine, Brian Majeski, he and his brother have a trade publication, Music Trades. Mm-hmm. And Brian was involved last week in an event at our virtual trade show. And Brian made the prognostication, whatever that word is. He likes to analyze data and then from the analysis kind of tell you what he thinks might happen. And he said, I think that people, not everyone, but enough people are going to continue to work from home. Maybe not every day, but often enough that they will still want to buy guitars because they have some free time, in between work. You're doing Zoom calls all day. You got 20 minutes break before your next call. And how many times have we're seeing, someone on TV and doing a Zoom call, and in the background's a guitar?
A lot of times.
Yeah. So they pick it up. They got 20 minutes to just do something else and then go back to work.
Well, I have to say, my husband loves to play guitars. Guitar, he has a few of them, and he's got.
You can never have enough,
I know that. That's what he tells me. I say that about shoes, and that's why we have a happy marriage. But he has a Martin, and the acoustic sound is just pretty incredible. I think it's a 28, 0028.
Sure, that's our bread and butter guitar.
Yeah, and it's just a beautiful sound. It's interesting, too, that I wonder, and talk to me, because you guys, too, a lot of things that we've talked about over the past year is companies innovating, being disrupted. And I do wonder whether it's digital, online, if you're seeing, you grow your business that way even more because of what's happened in the pandemic. And talk to me, too, about you guys are creating an earth guitar or an environmentally friendly guitar, which I think is another bigger trend that's coming out of the pandemic that we're all thinking a lot more about, especially as the world shut down, right? And all of a sudden there was clean air, or we saw the fires in California. We're just thinking a lot more about our environment.
So the first question, what we've seen at the retail level is the retailers that already had a robust online presence have done better than the brick and mortar retailers. Some do both. Some came from a digital world and then did brick and mortar. Most came from brick and mortar and did a digital world. But the ones that can do both, because people are going to want to go back into a music store. There's something about hanging out in a music store, playing a guitar, talking to other guitar players, maybe buying something. But in the meantime, you can't do that. The other thing, what I've seen in my career is that, we use these, they're called rare exotic woods for a reason. And we need to find alternatives, and we need to take better care of the rare exotic woods. And so we've partnered with the Forest Stewardship Council, and they audit us. They come in annually, and they want to make sure that when we say we've bought this wood legally, they come in and they say, prove it. We want to see the paperwork. We want to see and so that's what the Earth Guitar is. It's a way of us saying, you can buy these rare exotic woods, and you can buy them legally and correctly. And that's what it's really all about, is there's still illegal logging going on. There's still, wood that gets sold nefariously. I want no part of that, and I don't think any guitar should have, I don't think anything made out of wood should have any illegal wood in it. And so there's still a big concern, and you look over, you look in some parts of the world, and a $100 bill will buy you a lot of illegal wood.
Yeah, I can imagine that. And listen, the way of consumers, they care about this stuff, and they're increasingly asking the questions.
I'm glad for that, yeah.
Me too, as well. So what is this Believe in Music Week? It's a virtual event. People who are interested can check out the NAMM site,
sure.
NAMM.org.
Today and this weekend, log on, it's free. There's going to be some really good music this evening and tomorrow. So it was we had to pivot. Normally, this week would be our traditional big international trade show as part of our trade association in Anaheim. Can't do it, right?
Yeah, right.
Not going to happen. And Joe.
Okay, guys, look what's happened. 5 minutes to 10, and we closed our position on Japanese yen. Just right here. As you can see, from yesterday, we have nice 2,000 pounds in profit. So all of you who followed me, well done. Good profit. Have a great weekend. And I'll speak to you all next week on Monday. Have a great one. Be safe.
Community, but it's an important one. Hey, very quickly, 30 seconds here. You do a lot of collaborations with celebrities, Clapton and others, in terms of making guitars. Is there someone you haven't made one with that you'd love to do? Just quickly.
Yes, absolutely. And we've tried and tried and tried. So there's a couple. Bob Dylan, Neil Young. Anytime you're ready, we're ready.
All right, deal. And when they do it, you can let us know. Come on back on it and tell us about it. Listen, Chris, thank you so much. Good luck with the event, and great to check in with you. And I hope we can do it again in the future.
Sure, thanks.
Be well. Chris Martin, the fourth CEO of the Martin Guitar Company. We said family run, family owned, joining us on the phone from Bethlehem, Pennsylvania. All right, coming up next, we've got Sound On. Kevin Cirilli, he is off today, but Jeannie Shanzano is back in the hot seat, taking us through Sound On. So, Jeannie, what do you got coming up?
Hi, and what a fascinating conversation.
Pretty cool, right? Do you play guitar?
I don't. I play trombone very badly, but that's about it, Carol.
All right. That is so cool, Jeannie.
But joining me today is Rick Davis, a Bloomberg political contributor, and also we're going to be talking to Congresswoman Haley Stephen from Michigan about everything that's been going on in this very busy week in Washington, D.C.
No, nothing's going on, Jeannie, this week. Quiet as can be. Listen, kiddo, have a good show. Looking forward to it. Sound On with Jeannie Shanzano. She's coming up with Sound On in just a moment. What a week. As I mentioned at the top of the show, we started with one president, finished with another one who's been signing a lot of executive orders addressing the pandemic and also looking to help out those who are hurt by the pandemic in an economic way. We've got a great team here at Bloomberg Business Week. Ariel Agami, Donnie Holloway. We've got Chris Giacomi. We've got Marufo, we've got Reggie, we've got all of them. And of course, we've got Paul Brennan who make it work. Oh yeah, and Charlie Vollmer. Have a good weekend.